Hello, everyone. My name is Samir Khan, and I'm the Managing Director of Code-Based Technologies here in Asia Pacific. Besides leading and growing our footprint and reach within APAC and ANZ region, I also speak and host Disruption Demystified, a podcast show brought to you by Code-Based Technologies, where we speak about everything fintech. Today, I'd like to welcome you all to this exclusive session specially created as part of Singapore FinTech Festival 2021. Allow me to introduce you to our esteemed guest, Ms. Zein Malhas, Chief Digital Officer at Capital Bank of Jordan. Zain's experience spans over 14 years in investment banking, corporate banking, transaction banking, and digital transformation. Now, between 2014 and 2018, she managed the global subsidiaries business at Standard Chartered Bank Jordan, looking after the bank's network business in Jordan by managing relationships with multinational organizations and subsidiaries of global relationships. Prior to that, she worked as part of the corporate and investment banking department at Housing Bank for Trade and Finance from 2007 until 2014, where her experience was focused mainly in corporate finance, project finance, and syndicated facilities. She joined Capital Bank in June 2018 as head of transaction banking and was responsible for establishing the institution's transaction banking business. Her role transitioned from transaction banking to heading products and channels for the bank's business in Jordan and Iraq. With focus on digital transformation, she further transitioned to Chief Digital Officer, which was the point at which she was given the opportunity to lead the bank's neobank project, and for which she's now being appointed as the Chief Executive Officer. So congratulations to you, Zain, for this, for this elevation, if I will. It's a pleasure to have you with us today, and thank you for making the time to speak with me. How are you today?
Thank you very much, Samir. I'm very well. Thank you for the introduction and for the opportunity.
So, yeah, it's a pleasure. It's a pleasure to speak with you. So, Zain, you've spent a fair bit of time, a lot of time within, let's say, the traditional banking space with a focus on digital transformation. So what, in your mind, are the most important gaps that you see in the world of traditional banking, especially gaps which I may say potentially digital banks aim to solve?
So, as you rightly mentioned, Samir, having spent my prior life in traditional banking and mainly in corporate banking, it's actually the best way to address this question is to look at what problem statements digital banks and fintechs are trying to solve for today, right? Because this rise of digital banks and fintechs it comes from those gaps that we find in traditional banking. And the way we could look at the gaps are both from both perspectives, from the bank's perspective and from the customer's perspective. So from the just to name a few of the gaps that are from the bank's perspective, or those that are inward looking, if I can say, we obviously have lack of agility. As much as we try to transform our existing setups, the organization itself and the way it's set up, it makes it a bit difficult for the bank to be agile, to be to reach to the level of the flexibility that is needed to live with this constant change in the way financial services are heading. Another key gap is in cost effectiveness. So you have high operational cost and running cost, which digital banks have come to try to solve for. In addition, obviously, to operational inefficiencies and procedures and legacy systems that the bank needs to try to change before they are able to meet this competitive environment they're in. Looking at the customer's perspective, of course, it's a different story. So the level of convenience that is currently lacking in traditional banks, maybe even security with all the changes and all the digital enablement that actually opens up different kind of risks. Fees in general, right? So traditional banks are in the customer's mind are more expensive. They lack transparency. So it's not similar. It's not the same as when you deal with digital banks that have it all right in front of you. It's a seamless experience, very transparent experience, low fees, even no fees in some cases, and obviously the whole personalization. So as much as traditional banks have been trying to have a more personalized experience, a more customer-centric approach, they are still lagging in comparison with what fintechs and digital banks are doing.
Well, that's well put. But, then one could look at the possibility where traditional banks could fast track. They have the money, they have budgets, they have existing business, and therefore they could potentially just adopt digital transformation and change, and potentially also reduce cost and all that follows with being digital. But we have seen, and in your experience, am I right in saying that traditional banks have been slow in terms of adopting digital change? And if so, why would that be so much so?
I would have to agree with you that it has been slow adoption. However, obviously this depends. It depends on the geography, it depends on the markets, on the maturity of the markets and the banks. So if we were to say, yes, the general consensus is that banks have been slow, or at least in comparison with fintechs and other digital banks.
Right.
I would say the most important reason would be culture, and I cannot emphasize it more. So
Right.
Changing an existing setup is a completely different challenge than establishing a completely new setup, right? So today traditional banks are stuck with an existing setup, existing legacy systems, as I was mentioning in terms of the gaps. So these same gaps are reasons also for this slowness in adoption of digital solutions and becoming more digitally enabled. One very important point is tone from the top. So unless you have buy-in from the shareholders, investors, the CEO, that pushes this cultural change across the organization, top down, and unless this is also coupled with the acceptance of mistakes are allowed, with the push that basically we need to spend, because yes, banks can afford that, but they are not maybe allocating enough budgets for that, because they tend to look at this as, what is my return on investment? They're addressing it the traditional way they typically do, looking for immediate results. Meanwhile, no bank can afford not to adopt digital and not to actually transform. So it all boils down around the same theme of what actually these gaps are that we've identified are also the key reasons for slowing down that digital transformation.
Right. Indeed, very much so. And, traditional banks have had this challenge of, from a perspective of reaching out to their target audience or the target market. I just wanted to understand how would you go about, or what are your thoughts now, probably leading the neobank that you will lead, from a financial inclusion perspective, because the cost of onboarding does come down, and there are facts around that. So how do you look at that? How do you see neobankings impacting financial inclusion, if you will?
So the fact that neobanks will impact financial inclusion is a definite thing. There's no arguing about that. However, it's very important when we say financial inclusion to stop and actually define it, because we tend to think of financial inclusion as looking at those customers that are not bankable, right? And therefore are unbanked. However, we should first split this into customers that are not bankable and are therefore unbanked, who have different needs.
Yes.
And then you have the bankable customers that are either by choice unbanked, or they are underbanked and
underbanked would be, yes.
Yeah. So first of all, when we want to look at the impact of neobanks, this is one key question: which customer group are we actually addressing, and
Right.
what are the overall circumstances. So for example, if we look at a country that is very much a cash dependent economy or cash driven economy, the key problem statement that we want to solve for is how do we get money into the system.
Right.
So that's a completely different view from when we look at a more mature economy where you do have some level of digital and electronic payments,
Right.
but then you're looking at different needs. In some countries, we still, in most countries, but some even we see more so, you do not have access to finance, or not easy access to finance. You need to either transfer your salary, you need to have some form of security, some form of collateral. So the impact really of neobanks on financial inclusion boils down to what the customer needs are, and how much can we address those customer needs through neobanks and through digital solutions in order to really have a true impact on financial inclusion. But ultimately, when you say neobanks, digital banking, fintechs, definitely you have to think financial inclusion, because we're already looking at disrupting the way traditional banks are working.
Right, absolutely. I'm sure. I mean, because it's good point. Traditional banks have had high cost of customer onboarding, and because they do maintain high overheads because of physical branches and so on, and that gives digital bankings or neobanks an edge. Where the cost of onboarding would be, of course, scaled down much more. I mean, I know that cost of onboarding usually is in hundreds of dollars, and it's coming into two digits, through a neobanking proposition. And of course, it's good to define, from a bank's perspective, it's good to define which is your addressable market. Would it be, as you rightly said, the unbanked or the underbanked, and the underbanked segment sometimes does get overlooked just because of the quest of trying to bank people who were not bankable at some point, right? So, you're building a challenger bank, and what's the exciting stuff that's so different from being a traditional kind of a setup. So the question is really, what are the exciting things, or what excites you about building a challenger bank?
So much is exciting. So, I mean, I cannot tell you how much, but in a nutshell, I can tell you, to summarize what really excites me is that I feel I have been given wings, right?
Wow.
So having been a corporate banker in my prior life, and then moving towards digital, and having experienced digital and being asked to actually be part of this transformation, and then shifting towards a completely isolated, segmented setup that gives me the ability, that with full empowerment, that gives me the ability to build something from scratch. That's the essence of where my excitement comes from. Basically, first of all, the technology, right? It's really exciting that I find myself today not thinking at all about the existing infrastructure, existing setup, existing legacy systems.
Right.
It's now about this very strong technology stack that we have, that is very well integrated, that has the open banking capability, that allows me to no longer think about technology holding me back. Technology is really, for the first time ever, I feel that technology is enabling what we want to do as a business. Having strong partners as well is really exciting, obviously, like code-based technologies. Yes. So it's usually in the traditional setup, we've had technology providers that were more so like vendors to us, right? But now we're looking at a technology partner that is very strong, that is really a trusted advisor. It's a true partnership where we're building something together. Lastly, I would say the most exciting thing is starting with a clean slate. So this is where you can actually transforming something that is already existent and dealing with data that is literally all over the place is very different from the understanding that we have nothing, and we're building on that with the setup that will enable us to monetize the data that we can collect in the future.
Right.
Because I truly believe digital banking is very much about data and what we do with this data. So being able to start clean, building the data, collecting the data, storing it and monetizing it is really, really exciting.
Absolutely, I think so. And of course, it is going to be a very exciting journey with you. So, from one perspective, we're seeing that digital banks have there's a reason for them why they're popping up all over the world. There's been a fair amount of success in Europe. There've been regulators who are rolling out licenses in different parts of the world. I'm based in Singapore in Southeast Asia, so we've seen Hong Kong come out with licenses. Singapore and Malaysia is going to do that now, in MENA as well. So I just wanted to kind of put in another question here. There has been a thought process from a regulatory perspective where regulation drives, setting up of these banks, or, under the regulation, the regulator drives an initiative for neobanks or challenger banks to come up. As against, in some markets, there's a very market-driven approach. From Jordan and Iraq, from that perspective, do you think that this is a play? What are your thoughts? I mean, this was a play that Capital Bank wanted to embark on because it was market-driven, or was it purely because, the regulators decided to do something about, from a financial inclusion perspective, or whatever their compelling reasons would have been? Where do you see that as a play?
Actually, in both Jordan and Iraq, it was more of a market-driven play.
Okay.
However, the regulators have been really focusing on financial inclusion. They have been trying very hard to issue whatever regulations are needed to facilitate this. In both countries, we still lack regulations that govern digital banking.
Mm-hmm.
We do not have licenses for digital banks as of yet.
Yes.
So it is today market-driven. Yet we see on the flip side, regulators being very open to sitting around the table with us, listening to what we want to offer, and enabling us and trying very hard to support us within still taking into consideration risks and obviously being regulators, right?
But yes.
But it has been really refreshing to see that regulators are very open-minded, very keen to support banks with these initiatives, and understanding how important this is to support their initiatives and their strategy towards financial inclusion.
Excellent. So, the good thing about this is that you're a bank and you get to set up the digital bank as well. So you become a neobank as well. So if the regulators do take an approach that consortiums from the private sector do want to get into financial services, you have a head start because you would already have captured a certain portion, a large portion, I would say, of the market. How will this, people have been talking about this, in the last 4 or 5 years, with the boom of, neobanks coming up or challenger banks coming up, whatever terminology you use, depending upon the region. Is it like, in your mind, a threat to incumbent banks or traditional banks? Or, is there a role that traditional banks will have to start looking at? I mean, the bank has taken a good stance that they want to have a digital bank, a neobank, and address a certain market segment or provide additional services. And that allows, because with a new stack, a completely new digital stack, you can do much more than rely on on a legacy model, but or a legacy stack. But my question is, will there be? Is it going to be a threat to traditional banks, or is it? What are your views on that? Because different people have different views around it. Yeah. Keen to understand.
I believe it is already a threat, but it's a good kind of threat that actually pushes traditional banks to digitize in one way or another. So it's either by going ahead and setting up a neobank the way we have done, or by choosing to become more digitally enabled and to digitize and transform themselves. And in most cases, even banks are looking at doing both things in parallel. Now, ultimately, the way I see things moving, however, this would require a couple of years down the road in mature markets, and maybe even after that in our region, is basically, so banks would continue to become digitally enabled. They would set up their own digital banks to serve the masses, and then eventually SMEs, retail customers would fall under the whole digital-only experience. But then banks would never really disappear, in the sense that you will still need relationship banking.
Yes.
Relationship banking can never be fully, in my personal view, can never be fully replaced by digital banking, because
True.
like large corporates, where you need actual assessments, right?
Yes,
You
of
need human
course.
intervention, you need a
Yes.
relationship.
Yes.
Private banking, wealth management, investment banking, so all of those as well would still require some form of relationships,
Indeed.
human
Indeed.
interaction.
Yes, indeed, indeed.
Yeah.
So good stuff. I mean, it's such a joy to hear from you on what's happening with Capital Bank of Jordan. I really am looking forward to your success as driving the neobank. I hope you guys go live soon and really capture that market and make a name for yourself. We've been speaking to Zein Malhas from the Capital Bank of Jordan. It's good to have you, and we'll speak again. I'm going to potentially ask you again to be as part of our podcast at some point of time. So pleasure indeed. Thank you for your time. There was so much shared today, but this was a start, and really it was good to hear from you on your views. Thank you so much.
Thank you very much, Samir.
Yes.
Thank you.
All right.